Now, more often than not, minority shareholders are left out in key decisions concerning the running of any company. This is regardless of the fact that they have a share of the cake. Now, seldom are they properly involved in the banking process, raising questions whether the direction of the company is the best interest of the stakeholders. Charles Gitonga looks into why this is so.
Exclusion of minority shareholders from high-level boardroom decisions has been the practice for years now. In some cases, these shareholders have gone to court over the deals they feel were ill-conceived, but in others, silence has prevailed. Analysts say shareholders represent distinct interests while investing, thus some are disinterested in the running of the company.
People buy shares for different reasons. So they are just traders who just want to make money. You know that you've done your maths. You know that the share is undervalued, and you think that over a certain period of time you think you can get a significant value.
One of the factors leading to interest of minority investors being overlooked is the structuring of the company shareholding that limit their gains. For example, in the case of National Bank of Kenya, 85% of dividends declared by the board of directors for the year 2013 went to NSSF and National Treasury, who are the main shareholders. This is said not to be in favor of minority shareholders.
Every time they declare dividends, you find that the two majority shareholders take home about 85% of those dividends. Because of the ordinary shareholding, and also because of the preference shareholding, the preference shares. Because the way they were structured, the preference shares actually the way they were structured to benefit a lot of NSSF.
From a classic example of Access Kenya buyout to issue of Safaricom dividends, to Kenokobil hostile takeover bid, to even most recent CMC Motors buyout, minority shareholders seem to be bearing the weight of being on the wrong end of the stick. In some cases, shares remain suspended from trading, locking investor funds for longer than desired periods, raising questions as to whether they ought to be allowed to combine their shareholding and speak with one voice.
They should have provided sufficient information, avail such information to even minority shareholders. We are going to do this transaction, and ideally such a deal has to go through some sort of a vote or a nod.
Analysts agree that shareholding cannot be legislated, leaving minority shareholders with few options whenever their interests are violated. Charles Gitonga, KTN Business.